I'm Chris Preston.
And I'm Brad Simmerman.
Welcome to Street Check, the best podcast in the history of Cabot Wealth Network. Brad, a week ago we sat here and we asked you about your Vegas trip from the weekend before, which sounded lovely and sounds like you made some money on. Let me tell you about my weekend last weekend. This is my version of a Vegas trip. We had 5, 7, and 8-year-old girls over for a slumber party to spend the night to celebrate my daughter's 8-year-old birthday last Friday night. Vegas is known for its odd hours. Maybe not so much for you on this trip. What time would you predict that these girls were all up?
1 or 2 in the morning would be my
Actually,
guess.
they did go to bed late for them, like 11ish or something.
Oh, up in the morning?
They're up at 5 in the morning,
Ugh.
top of their lungs. It was very upsetting. It went pretty well other than that. It was festive having them there. They, had some funny comments, lots of funny requests. They all watched Barbie together. That was a consensus pick, and she is her father's daughter.
Did they go for the Barbenheimer combo, or was it just Barbie?
No. They might not have been quite ready for that. But yeah, so that's my Vegas trip. That's the thing that I had to recover from the past week. In fact, I'm slightly sick as a result. I guess you bring a lot of germs into your house when you have 5, 7, and 8-year-olds.
It sounds like it went as well as could have been expected. Personally, I'll keep going to Vegas.
Yeah, unlike you, I lost money on this visit. Yeah, but it was worth it.
Good. Well, I'm glad it went well. I think you had mentioned it. My fear for you was like the odd number of kids, because in our experience, having the sleepover with the odd number of kids, you always end up with one feeling left out, and then you end up like talking to some 7-year-old that's crying because she feels like nobody wants to play with her. But it sounds like you avoided that one.
We didn't have that. It was a good group dynamic. They all got along really well together, and then they all turned on each other when they were exhausted at 10:30 at night. And there were lots of visits between the time they were supposed to go to bed and the time they actually went to bed, but that's okay. To be expected. Anyway, moving on to the market. Why don't you give us a rundown of what we're going to talk about today?
All right. So today we are going to talk about the economy in general, GDP coming in stronger than expected, inflation a little bit lower than expected, still on the back of the consumer largely. We will talk about cannabis and the performance of cannabis stocks, notably since the full text of the HHS recommendation came out in January. Came out on January 12th. And then we're going to talk about the arrival of the Bitcoin ETFs, what Bitcoin has done since that happened. Again, in mid-January, the 11th is when those started trading. And then we will wrap the show talking about the evolving electric vehicle landscape. Tesla reported earnings. I'm sure we'll get into that. But what are we seeing with EVs? Are they still as hot a sector as they were maybe 2 years ago? But before that, as always, we will be doing our Defend the Take segment. Chris, you're on the clock this week, and your take is that Trump-Biden Part 2 is the safest election scenario for the market. And you have 90 seconds. You may begin now.
Okay. The words "for the market" there are the really key words. Trump-Biden 2 for the general public is a pretty depressing scenario, regardless of your politics. I'm not going to get into any of that. I'm not going to touch that with the 20-foot pole. But when two average age 80-year-olds who aren't terribly popular are running against each other for president again, the public doesn't really like that too much. But the market likes known quantities. These are two people who have been president, and the two people who've been president when the stock market went up. So the market knows what to expect, regardless of who wins. Barring anything crazy, January 6th happening, although even that I don't think had much of an impact on the market. The market is not going to, collapse as a result of one of these two winning. Even when Trump won the one time, the market collapsed that night, and futures collapsed that night. And then they bounced right back the next day. And I think it was because it was a surprise that Trump beat Hillary Clinton. The market sort of got to grips with it by the next day. Like, well, maybe pro-business, whatever. And then the market ran up for a couple months. Um, so the market sort of adapts quickly, but with two known quantities like this, again, whether people like it or not, they are known entities, and there's no real surprise here. It almost certainly is going to be those two, barring some sort of miracle Nikki Haley run. But yeah, that's it. Trump Biden part two, good for the market.
Yeah.
Safe.
Yeah. I gave you a little bit longer to wrap it up, but
Yes.
yeah, market likes divided government too. So I don't know what the down ballot races are going to look like or anything
Yeah,
like
we'll
that, but
see.
like you said, it's not there's no unknown variable coming in here. Um, I mean, maybe if like we end up with Biden win and Kamala being president, like maybe that's something that, right? Like you said, these guys are 80.
Yeah.
Most people don't like them. I don't particularly care to be voting for 80-year-olds, but I don't have a choice. Um, but
Yeah.
let's step off this third rail and
Yeah.
let's
Yeah.
move to
We're
something
towing
a
the
little
line
bit.
here. Yeah. Let's get to the big three. Okay. So number one, US economy continues to be resilient. What was it 3.1, 3.3% GDP growth, above 3%
Yep.
GDP growth in the fourth quarter, above expectations. It continues, the US economy continues to be better than expected. We're nowhere near a recession. The soft landing scenario has gone from a seeming pipe dream or something idealistic to borderline a reality at this point. Earnings continue to be, we're early in earnings season, but so far, for the most part, they've been decent enough. And as a result, what do you know? The stock market's at all-time highs. I don't think that's a coincidence.
Yeah, and we're seeing jobless claims coming in sort of in line with expectations. We're seeing inflation today came in PCE at 0.2% higher than last month versus expectations of 0.3%. So inflation is sort of moderating. My question internally is sort of, okay, well, if we've got all this moderation, there's less impetus for the Fed to start cutting rates. We're also seeing the 10-year, 2-year Treasury spreads continue to disinvert. The caveat there is that once they complete disinversion, that has sort of historically been the precursor to recession. So maybe something happens in the spring, but everything does seem to be lining up to deliver on that soft landing. The market is a little bit exuberant. We're still pricing in 6 Fed rate cuts. But if everything is humming along like clockwork, they have less incentive to start cutting rates. You don't need to save the economy if the economy is working exceptionally well. So maybe that puts a lid on things at some point down the line.
Yeah.
There is still that disconnect between what the expectations are for the Fed and then what the expectations are for the economy. But things seem to be moving along nicely right now, and the market is reflecting that. We're at all-time highs.
Yeah. And you and I have been saying that we were pretty skeptical all along that the Fed would start cutting rates in March. And I mean, this all but it had dropped already to a 50-50 proposition when we were on here last week. And I think this all but cinches them pushing it to at least the second quarter, cuts to at least the second quarter, which, may have a short-term disturbance in the market, when Powell speaks. I think it's next week, 31st, or when they
Yeah.
release their next report. I could see that, pushing the market down for a couple of days, but not in the way that it did, this time a year ago.
Yeah, the Fed Watch Tools still has the street calling for a quarter basis point cut, 46%. So it's a little bit below a 50-50
Yeah.
proposition right now for the
Yeah.
March meeting.
Right.
But then when you get out to May, you've got 80% chance that there is one or more rate cuts by then, 87 actually. June, that number rises to it's still right around 88. So the market seems to be looking ahead to the May-June period for when we actually start seeing rate cuts, with an outside chance that maybe that happens in March. I've seen credible analysts saying that their base case is that May-June that May June segment, and that's sort of what we've been talking about for a while. But I don't know. Like at some point, the bull market doesn't really care about these things anymore, right?
No.
Like you just get
You
the
saw it last
exuberance.
summer. Remember? It felt like last summer when there was that, what, 2 month run up driven by AI. We're like, no one cares about the Fed anymore, even though I think were still hiking rates then, and it didn't matter.
Yeah, the important thing I think is putting it behind us.
Yeah.
Once it's behind us, if they cut in March or if they cut in June, it doesn't really matter. They're sort of on the glide path to lower rates. And once you're there, you maybe get a little bit of turbulence. But like you said, the market hates uncertainty. So once the Fed starts cutting, you've got some degree of certainty in place, and then you can start investing accordingly and projecting accordingly.
Yep. Yeah. Okay. Let's move on to, speaking of things that are working in the market right now. Number two, cannabis, which is not something we've been able to say often, but believe the ETF that tracks cannabis stock prices, MJ,
Mhm.
at least it's one of them. So the benchmark is up 12% since January 12th, and that was the date that was it the DEA acknowledged that they are reviewing the rescheduling request?
So the full HHS the Health and Human Services recommendation came out on the 12th. It was a 252 page report that is essentially the backing the push to move cannabis from a Schedule 1 drug to a Schedule 3 drug. The big takeaways largely were that it leaned very heavily on the science, on specifically the fact that there are medically acceptable uses for cannabis. So it's not playing politics, right? I mean, we've joked about the thumb on the scale of the Fed because it's an election year, and obviously there are political implications for Biden and for the administration to try and do something that's going to engage a youth vote. But that's not the tactic that rescheduling has taken. It's been leaning on the fact that there are medically acceptable uses for cannabis. You know, it's a good alternative painkiller for people that might otherwise be on opiates, and you know, there's evidence that it helps with some things like PTSD, and right, like there's this whole body of evidence that they can lean on. One thing that is pretty notable though with the performance of the sector, which is up 36% since October 30th. So that's sort of coincided with the bull market run in equities more broadly. Individual names have been performing notably better. I'm not going to get too much into the individual names because we have a cannabis portfolio. I believe you might have some cannabis exposure in your stock of the week portfolio as well.
I've one. Yeah. Yep.
But there are individual names that are up as much as 90% in that same time period. So I do think that I wanted to bring a comparison for you that I don't think it works perfectly, but might be instructive or might be somewhat useful. You know, one thing that has come up when Mike, especially Santolo, has written about some of the new, like the gambling stocks, the online sportsbook stocks, the DraftKings of the world, the Penn Gaming and ESPN, is the land grab phase, right? Last year we saw these companies offering, you know, $1,000 bonuses, taking losses to get new subscribers just for the ability to get in early, to grab land, and then you sort of maximize your profitability on them once you have that share. I do wonder if there's going to be an element, a similar element with some individual cannabis names, if we get rescheduling and as we sort of approach nationwide decriminalization. If you're going to have some leaders that end up pulling up the whole sector while other companies struggle, and a lot of them will probably ultimately become victims of consolidation.
Yeah.
The one sort of caveat that I have on that is you can't traffic marijuana interstate right now because of because of the criminal nature of it, and because you can't move illegal drugs across state lines to sell them. So I do think that sort of gets in the way of a tidy narrative of a land grab, but I do think that we'll see some more consolidation. Cannabis has suffered from price compression for a number of years because everybody was getting into these markets on a state-by-state basis, and it doesn't really lend itself to optimization and efficiency if you're just doing everything that you can to get licenses on every individual state. So I'm curious if you have if you've given any thought to maybe consolidation in the industry.
Yeah, I mean, I think there will be a consolidation. Used to be there's already a lot of companies that have fallen by the wayside during this, cannabis bear market for what, the past 3 years. So I think the big boys, and as this is part of why I added one of the biggest boys, I won't say which, to stock of the week recently, for that reason. I I guess from just a high level, my question is this the real deal in terms of a cannabis rally, or being enough catalyst for a real sustained cannabis rally? It's been the boy who cried wolf sector for a couple of years now. Every time you're like, oh, here, finally they're low enough, people are buying, and then it comes crashing back to earth. Does seem like there's more traction this time, and I think that's because there's not just the rescheduling catalyst out there, which is a huge one, but more states legalizing. I know Michael Brush, who runs the Cabot Cannabis investor portfolio, has highlighted places in Europe where they're legalizing. Germany, I think, is a big one. So just it becoming more mainstream, not just in the U.S. but globally. But in terms of U.S., I mean, obviously, I would stick to U.S. companies if you're trying to invest now.
Yeah,
And I think there will be some consolidation. Yes.
yeah. Canada is a more mature market, and they
Yeah.
have been dealing with a lot of difficulty with these companies turning profitable.
Yeah.
Just from a return standpoint, if we're looking at MJ as a proxy, that's the ETF is 364 right now. It was as high as 462 in September. That was um, that late summer response to the
Yeah.
rescheduling news, where it practically doubled overnight after a couple of weeks. That's sort of that flurry of investor interest and investment. It's been a more sustainable uptrend, certainly since the October lows.
Yeah.
I mean, just looking at it from a technical standpoint, I would say that it seems like a more sustainable rally. But yeah, people have been burned to the sector in the past, and I think that they're probably reticent to get in too early. But I do think that if you're considering a cannabis investment, the MJ is a perfectly reasonable way to go about it, because even if we do see industry consolidation, the consolidators are already in the ETF,
Right.
right? So the big boys get bigger and they just sort of shrink these smaller participants that are already in there. But I think outsized returns come from individual companies that are better positioned for decriminalization, and then to potentially expand out if we have something that's more akin to broad legalization. I don't think that's going to happen going back to the politics thing in a second Trump term, but maybe in a second Biden term. I don't know.
Yeah, we'll see. Yeah, all comes down to the election year, I guess. Um, okay, let's move on to number three in our big three, other side of the coin from cannabis, pun intended, Bitcoin ETFs, which launched around the same time. What was it, January 11th?
Yes. Yeah.
And are actually down 11% since launch. You think that's sort of a buy the rumor, sell the news kind of situation, right?
Yeah, I guess in that regards, it's not that dissimilar from what we saw with cannabis over the late summer and early fall. Grayscale Bitcoin Trust has had the most outflows. BlackRock, IBIT has been the beneficiary with the most inflows, but Bitcoin as an asset is down 10.8% since January 11th. We're also seeing Bitcoin proxies, companies like Coinbase, down 12% since January 11th, down 20% year to date. MicroStrategy, which was Michael Saylor's Bitcoin fund, is down 11% since that date, down 30% year to date. So it very much looks like a buy the rumor, sell the news. Even volumes of the underlying cryptocurrency were more muted since the announcement, since those Bitcoin ETFs went live. There were on Wednesday 159 million of outflows from Bitcoin ETFs. with Grayscale Bitcoin Trust being the biggest one because it was the only one that was really investable before the SEC approved it, because it existed as a trust, and there was an obvious arbitrage opportunity there that we've talked about a little bit in the past. And they also carry some of the highest fees. I think 1.5% is their management fee, which is a lot to pay when you can go get a BlackRock fund that's, I think, less than a third of that. So you've seen a lot of outflows, you've seen underperformance. The big concern ahead of the approval of the ETFs was like, hey, everybody can get it now, right? The big talking point on sort of online cryptocurrency community was just wait for the mainstream public to start adopting it, wait for mass adoption, right? Like that's the rallying cry. And now we have an opportunity for that, and we're not seeing it. And it gets back to something that you have mentioned in the past, and I think you like to hit, is doesn't do anything. It's not really a usable asset class. Along those same lines, Vanguard will not allow individual investors to trade Bitcoin futures products, Bitcoin ETFs on their platform. They don't see a value in it. Their former head, Jack Bogle, in 2017, I think, basically said stay away from it at all costs. So just because it's available doesn't mean that the mainstream is really falling all over themselves to adopt it. And I don't really know what the next catalyst is. I don't particularly see one other than really strong bull market, right? It's a bull market play. It's a way to speculate. It's that seems to be the only thing that it's got going for it right now, or in the immediate future. So if the market keeps rallying, I think, maybe we get a bounce back for it. But in the short term, I think that lack of catalyst is probably going to hurt it, and you'll probably continue to see some outflows from the fund.
Yeah, here's the question. In a bull market, which would we just talked about cannabis ETFs, which would you rather buy now? Bitcoin ETF or a Bitcoin ETF or a cannabis ETF?
Cannabis right now, cannabis.
Yeah. Okay.
I think last year, a number of states that had legalized cannabis saw more tax revenue from that than they did from alcohol. We talked about it a few months ago. I think I had to take where brewers were going to underperform because the younger demographics right now, especially, are pulling back from alcohol consumption, and they're more likely to use cannabis as their weapon of choice, we'll call it. Is socially, there's more acceptance of cannabis use. It seems to be healthier for most people than alcohol use. I think that the underlying picture for these cannabis companies point to more profitability. I don't see the same kind of catalyst or real world adoption in most cryptocurrencies.
Yeah.
In the next 6 months, like if the S&P goes up 15%, yeah, Bitcoin's probably going to outperform. But over the course of the year, I probably would prefer cannabis.
Yeah. Yeah. I mean, it has as we've said many times, cannabis has a use. Bitcoin is not. Yeah. Bitcoin's utility is as a bull market proxy, essentially. And a Bitcoin ETF launching now is, to me, a much more sober version of, meme stocks or SPACs. I mean, not to that degree. I don't think it's a tell that the market's, some would say it is overcooked, but I don't think the market's about to pull back because Bitcoin ETFs just launched. Just the ETFs themselves are pulling back. I have a fun, just Bitcoin ETF related story before we move on to our next topic. A little over 10 years ago, I went to the Value Investing Congress in New York. It was like the annual Value Investors Conference. Two brothers, presented on Bitcoin ETF they wanted to launch. At the time was very controversial. It was the Winklevoss twins. These Cameron and Tyler Winklevoss, who famously attempted to invent Facebook, I think is what, and did not. It was Mark Zuckerberg. So similarly, they tried to launch Bitcoin ETF. The idea was right, but the execution, again, was poor. They were not the ones that launched a Bitcoin ETF. There were multiple times rejected by, I guess, the SEC.
Yeah.
And so someone beat them to the punch. But yeah, 10 years ago, I thought it was going to be actually, I think because of the messenger, no one in that room were like, oh, Bitcoin ETFs are coming. I think they're like, all right, we'll believe it when we see it. And sure enough, 10 years later,
I,
they're just arriving.
and one thing that I'll say as somebody who has used cryptocurrencies, transferred cryptocurrencies, if your core thesis is, oh, well, this unredactable ledger is found, it could, be the foundation of a global financial system. Okay, yeah, maybe. But if it's that, hey, you can start paying for stuff soon, put $100 into Ether or Bitcoin, and then try and pay somebody with it, and just go through the technical steps that are required to do that, and the amount of time it takes to transfer the money, and the lack of confidence that you might have, like, oh, hey, did I put one wrong digit in this wallet address? Am I going to lose all of this with no way to reclaim it? I think that the mass adoption, you'll be able to pay for stuff, I think that narrative is sort of falling apart now that more and more people have exposure to it. There are still positive uses, right? Like famously, women in Afghanistan using cryptocurrency to avoid the Afghani government, avoid having assets confiscated, right? Like I would consider that a social good.
Yeah.
And I think there's something there, but uh, it was what Jamie Dimon that said all it's used for is scammers, hackers, and tax avoidance and like
Yeah.
illicit drug trade. That's largely seeming to be the case right now.
Yeah.
I don't know
I
if you
spend that
bought
hundred
Bitcoin.
dollars. I'd rather spend that $100 on cannabis than on Bitcoin.
Yeah, but if you had come out of that conference with the Winklevosses 10 years ago and said, you know what, I'm going to throw $1,000 in Bitcoin, you would have been really happy. That would have
True.
been really well timed.
True.
You'd
I
be
just don't know
worth.
where I would have thrown it. It depends, I mean, I guess, yeah, you would have been directly into buying Bitcoin. But again, the loopholes to be able to do that were even greater then and still exist today. Okay, let's move on to our main topic for the day, which is electric vehicles. Um, we wanted to talk about this because the electric vehicle landscape, we had Carl Delfeld on months ago, I guess, who runs our Cabot Explorer Global Investing Advisory. And Carl has always had a keen eye on electric vehicle landscape and had exposure to electric vehicles. There aren't as many in there in his portfolio, I'll say, now than there were. And I think there's a reason for that. We talked about consolidation. I think there's been a plateauing at the very least in the EV industry. We're even seeing it with the brand that everyone knows, Tesla, as you referred to their earnings being sort of disappointing again this week. And then there's BYD, which I've mentioned on here repeatedly as being one of my favorite stocks, long-term stocks. Well, I'll just say I just sold it in stock of the week, with the idea that I'm likely to return to it soon. But a big reason for that is just Chinese stocks are struggling, period. Now it's not much to do with the company, but the company's still growing, but it's not growing so much that it's able to overcome China's problems. And there's still no BYDs. People in America hardly know what BYD is. So we want to talk about sort of what other players there are out there, and if it's actually return to the if the major automakers, the ones Ford, Toyota, Chevy, or GM, if the power's sort of back in their hands as the EV fervor has sort of died down and we're going more towards hybrid popularity. What are your thoughts?
Yeah, part of my thinking when we were discussing the topic is, we being the broad sort of investing public, has been talking about and looking at EVs as if they are a transformative technology, more akin to the internet than just simply a new version of a consumer good. And I think what we're starting to see now is that they were just a new consumer good all along. Last year, sales in the US, Europe, and China for electric vehicles was 8.7 million, which was up 33% year over year. But the pace, the acceleration of that is actually slowing. I pulled some AAA surveys that they do of prospective auto buyers every year. Back in 2019, 16% of people surveyed said that an electric vehicle would be their next vehicle purchased. They cited the environment at 74% as being a big motivator, the lower cost of EV ownership versus filling up at the pump at 56%, and then the idea of having this novel tech product at like 45%. And 21% said they just wanted to be able to use the carpool lane. They also said they'd pay up to a $4,000 premium. So this is back in 2019 for an EV versus a combustion engine car, an ICE car. In 2022, that number was up to 25% of people that said that their next vehicle would be an electric vehicle, with 77% prioritizing the cost of it. In 2023, that number actually dipped down to 23% from 25% of prospective auto buyers saying that their next vehicle would be an EV. Cost was still the major motivator at 76% of surveyed individuals, with the environment being second to that at 60%. I do wonder if we're just seeing market saturation, if we're reaching a point where essentially everybody that wants to own an EV and can afford an EV is able to get one now, and that adoption might be reaching a threshold that's going to take a really, really big move to get beyond. I mean, if you think about what the pathway for most buyers, right? Like most people are not buying brand new cars. Some people are leasing new cars, but I think a lot of the country is buying used cars. They're, or buying cars off of a lease. It sort of makes more sense economically to do for most people, and that's a marketplace for EVs that is not particularly popular.
Yeah. There's so many people I've talked, and I put myself in this category. So many people are willing, are EV curious, but not willing to jump in with both feet, and so they lean towards hybrids, and most hybrids are made by the bigger pre-existing companies. We bought a Volvo XC90 hybrid and love it, and the selling point is that especially living in Vermont, where you could go off the road pretty easily or be stuck somewhere for a while, depending on icy weather or whatever. It's mistrust of, will I be able to find another place to charge? Are there enough places for me to charge if my battery is running low? Whereas with a hybrid, it's great. We charge it overnight at our house, just plug it in. It's only in the winter, only up to 30 miles on battery. And I think it's like maybe 40, 45 in the summer. Cold weather makes it or weighs on the miles you can get. But, my wife drives it to and from work every day and doesn't have to fill up her gas tank. She, that's all pretty much on battery power. She doesn't have to fill up her actual gas tank for months. So we're saving a ton on gas. That's sort of a nice, happy medium that I think a lot of people are electing. Anecdotally, I've mentioned on here, we've seen a lot of Rivians pop up around us. I don't know what it's like in other areas of the country. You said you haven't seen many of them there. And I think we touted Rivian a few weeks ago when Tyler London was on here. That was one of his big picks. Well, here's what's happening. Here's what the market thinks of EVs, Rivian, right now. Rivian came public in 2021, like mid 2021, and rose as high as, let's see here, 172 per share in November 2021. It trades at $15 right now.
Yeah.
Nikola, you reminded me of this one. This was a big Cabot stock in 2021, probably right around the meme stock times, maybe before. That peaked at $79 a share in June 2020. It trades for less than $1 right now. There's been other examples. Polestar, which we were big on at one point. Neo, which does well in China, but just, it's been overshadowed by BYD. Um, there's other examples.
The one you were looking, so we had a meeting before this record. You were looking for one, and I just remembered it. Workhorse.
Yes. Yeah.
Workhorse was the one that it was building like a delivery truck platform. That one, that was 40.61 a share in February of 2021. It
Yep.
did not enjoy
29
the,
cents right now.
yeah, did not enjoy the bull market rally into the end uh, of 2021. And in November, so right around the top of the bull market, was trading at $7 a share. It had its own issues, but yeah, it's trading at 29 cents a share right now. There was one on this sort of same topic. I do want to call out an analyst, Gordon Johnson. He has a price target on Tesla right now at 23.53. That's $23.53.
Oh, I
And
thought you were going the other way. Okay. Wow. Yeah.
no, so he's definitely an outlier. But what he's doing is he's just valuing Tesla based on it being a car company, right? So if you strip out the Elon Musk of it, you strip out the robotics and the revolutionary technologies that are sure to be coming, and just value Tesla based on their units sold, 23.53. Tesla trading right now at 184.15. Whether or not he ends up being right and Tesla just turns into a new GM or a new Ford who lose money on every electric vehicle they sell, I have no idea. But when you start sort of you start extracting some of the hype from this stuff, which we saw happen with those more outlier companies in the future, valuations can tumble really quickly.
Yeah. I mean, yeah, we've seen it with Tesla. I mean, Tesla's down from it peaked. Let's see, that peaked also 2021, like most things, over $400, 407. Now it's been cut in half now after this, latest round of earnings, 184. Well, it's still above the lows from last year. It's got down to 113 at one point. But like you said, you can't value it as just a regular auto company because it's not. And here's the other thing. We're talking about consolidation in the EV industry and how some of these startups that seemed exciting 2 years ago, 3 years ago, have sort of not sort of, have really come crashing back to earth. They're borderline, non-existent anymore. Well, Tesla is the one big, is the, Taylor Swift of the industry. Everyone knows what Tesla is. Most people in America don't know what BYD is, even though it
Yeah.
surpassed Tesla in earning or in sales in the third quarter at least.
And that is something I should note that plays out in the secondary market as well. Tesla's move quickly off of dealer lots in a way that a lot of the other secondhand EVs do not. They retain value. They retain a cultural cachet to them. So I don't want to come out and belittle Tesla. I think it's a great company that brought EVs mainstream. But I do wonder if we're maybe collectively taking the wrong approach to EVs as a segment of technology.
Yeah, I just think with there was such appetite for buying shares of all things EV a couple of years ago. Well, as it sort of consolidates and a lot of those fall by the wayside, I think eventually, Tesla will find some more support. And I think it's the one, like I said, it's sort of the one Coca-Cola of the industry. Well, the industry is still young enough. We're still trying to find a Pepsi, a Dr. Pepper, or whatever. Maybe BYD will eventually be that. Maybe Rivian, but we haven't identified those yet. The brands that are just still like part of the bloodstream where everyone knows what they are, and right now we're trying to figure that out. And who knows what the candidates are? Rivian and BYD are the only that really come to mind. And Rivian, like I said, and the stock has imploded the last few years.
The funny thing about talking about whether we're hitting market saturation with EVs, the one company that I think is probably best positioned to overcome that is a company like BYD, which can offer these low cost EVs globally But
I still like the company.
because of our trade relations with China, we won't get them in the foreseeable future. But conversely, we're going through this painful build out of like the EV infrastructure. And, that's a big thing for people as well. You don't want to have to make a multi-$1,000 investment in your garage to be able to drive a car, right? You don't have to put a
Yep.
gas station in your garage, but you have to put in a 220 charger. Um, but I do think that a company like that, where it's like, hey, this is lower cost, it's lower frills, but it's this ideal representation of what an EV can do and how you can sort of drive it. That or maybe like a solid state battery tech, which I know a lot of companies are working on right now. Once we get to that solid state battery tech, you lose the long charge times. I believe it's less susceptible to some of the hindrance of cold weather on charging, which I know has been a big consideration. And your mileage is a lot better. You can get up to 500, 600 miles of charge instead of the low to mid twos to the low threes. So the battery tech making another leap or a much lower cost option, I think are probably what it would take to break over this sort of 25% consumer interest. And, on the topic of consolidation, there are a number of analysts that I've seen that have called for EVs to get to a 30% market share by like 2030. And if that's sort of the natural penetration point, but we have consolidation, that could be all Tesla. It could be that
Yeah,
Tesla is
that's my
selling
point.
one out of every four cars on the road. I don't know.
Yeah, and
Um,
it could bode well for BYD expansion and maybe like a company like Rivian that's sort of that you're seeing on the road, but the stock and the company itself aren't fully mainstream yet. But with that in mind, we wanted to bring on. So we're deep in the weeds here on we EV sector and stocks are sort of intertwined for us. We want to bring in someone, sort of a woman on the streets point of view. So we're having Madison Robertson, who's been be forced to listen to this whole discussion for the last 45 minutes or whatever it's been. Madison, I wanted you to tell us, because you live in Nashville area, right?
Hmm.
Tennessee.
Yep.
What EVs do you see many EVs where you are? If so, what? Do you have friends who have EVs? Are you EV curious? What are you seeing down there? I'm curious.
Well, first of all, thank you for letting me talk about cars on a Friday morning. Those my
I know
favorite
you're
things to do.
thrilled. You're excited.
I love talking about cars. Um, I think I told you this, but there's a Rivian dealership like right down the road from us.
Oh,
So
really?
those are kind of popping up. Yeah, those are popping
Oh,
up
we don't
around
even
here
have
a
that
lot.
here, I don't think. Wow.
Catch up. Uh, and I can't we don't have one. I can't name any friends that have it. My dad had, I think it was a Tesla for a couple weeks maybe, and he was driving from Atlanta to Highlands, North Carolina, and got stuck in traffic and almost ran out of charge.
Yep.
So he sent that back pretty fast because he makes that truck a lot. Um,
That's exactly like our point about hybrids is, people are afraid of that exact thing happening. And like, I want to help the environment, but I'm not ready to, dive head first into the EV thing. I'll get a hybrid.
mhm.
So that's consistent with the consumer survey trends is everybody wants to do the right thing for the environment, but then what people are worried about tends to be very topical. So people are concerned about the ability, early adopters are concerned about the availability of chargers. Um, when gas prices were through the roof, that was a big motivator. Once gas prices settled back down, now people are worried about cold weather because you had the cold weather snap through most of the country for the last few months. So it does very much seem to be that people in general want to help the environment. 1 in 4 people in general are interested in buying EVs, but everybody has these other factors that are in play sort of constantly. And I think, Chris, you and I are probably maybe more susceptible to the promise of EVs as a product, just generationally, right? Because when they started becoming mainstream, we were probably younger. They looked very much like the wave of the future. I'm curious, Madison, if you see the same kind of thing among your friends where it's like, hey, this is this new future tech, or if you're just looking at it as an alternative to whatever you would normally drive.
I want to say it's just an alternative. I see a lot of hesitation. Isn't there still they're still working out how to recycle the batteries too, right? I think
Yeah.
that's a lot of the conversation that I hear on my end is people are interested, but the recycling process of those after, because how long did they last? Like 12 years or something?
Yeah, like tops. Once you get
Yeah.
past like 7 years, they start downcycling pretty quickly. After about 90,000 miles, you lose about 5% of your range. They build in an excess for the first like 30,000 miles, and that depletes down. Then you lose range. And I think Tesla recently rolled out a software update that cuts that down even further. But yeah, the lithium ion batteries are not, they are recyclable, but is there conversation about, it's like, okay, well, these rare earth minerals that they're using the batteries, those are also bad for the environment? Do you guys see that, or do you see that at all, Mads?
I don't have tons of car conversations with my friends. So I'm gonna
Don't?
say
All right.
no. No, my
You
husband
don't
tries to
talk
talk to
about
me.
rare earths. So this is Brad and his friends sit around sipping brandy and talk about rare earths all the time.
I don't have any friends. Talk
You
about
have
rare
us.
earth too much.
Yeah,
You
you have
have
about
us, Brad.
this is where you get it all out, Brad. Yeah. Well, so I think what we've gotten from this conversation, Madison, is you're pro coal. You're pro emissions, right?
She's in coal country.
Yeah.
I don't know. Is that what internal combustion engine means? That was what my
No.
husband.
No,
That
I'm
was what
just
my
messing with you.
husband.
You're not in favor of the environment, or helping the
I
environment.
love the environment, Chris.
I'm just kidding. I'm kidding.
Those people get the best parking spots. People with the little charging thing. The charging stations are always the first few spots in a parking garage.
That's the biggest reason to buy them right there.
Yeah, that the secret sort of downside is something like 26% of public chargers are not operational at any given time. So
Oh.
even as we build out this public charger infrastructure, a lot of them just don't work.
My cons list is growing.
Well,
Yeah.
I mean, that's sort of the thing, right? Like we're all looking at it as this promise of the new technology, but then the rubber meets the road and we start seeing like, okay, well, how does this actually not sort of fit in my life, and how does this not sort of fit in where I'm at? I think, Chris, maybe we propose a couple of big takeaways and then probably call it. We're getting a little
Yeah,
long in the tooth.
we're getting along in the tooth. Takeaway number one is that Madison hates the environment. Number two,
Don't hate the environment.
number two, just some of those stocks we cited earlier. I mean, I think consolidation is here. It's coming, and I think that it's going to buoy companies like Tesla, the biggest names: Tesla, maybe BYD, maybe Rivian. I don't know. What are some of your takeaways?
My big one is I think we're approaching the adoption threshold. I think as many people as want EVs are going to be able to get them in the next, if they can't get them right now, they're going to get them in the next 5 years. And that limit seems to be somewhere in the neighborhood of like 20%, barring some major advancement in either battery technology or a significantly lower cost option for people. So with that in mind, prioritize the companies that have new battery tech that are already popular, like a Tesla, or may have the opportunity to offer a significantly reduced price offering somewhere in the US. Probably not maybe BYD, depending on how things go with China, but
real wild card.
That's
Yeah,
where I'd be looking.
Yeah. All right. Well, we got to let Madison get back to her rare earths discussion
What
group.
about my takeaway?
Madison,
Thanks
what's
for
your big
having
takeaway?
Yes, I'm sorry.
Thank you, Brad. Thank you, Brad.
I apologize.
Well, I'm impressed that Chris referenced pop culture. He said the words Taylor Swift, and I was very, very surprised.
I mean, I feel like any idiot should know Taylor Swift by now, but yeah, or anyone who watches Chiefs games. Yeah.
Oh, that's true. I do love the environment. I just want to see the battery recycling get a little better. That's all. But I do love the environment. Thank you, Chris. And if you guys want to buy me one of those, that's fine too.
I think we'll make that from the profits from this podcast. That'll be your payment.
We'll start selling t-shirts.
This
Yeah.
podcast is free, right, Chris? Right? It's free to
Free.
people? Okay.
Yeah.
Right.
By the way, like and subscribe. We do so much for you people. Come on. You gotta throw us something. Okay. And we've done a lot today. So it's time for us to sign off. Madison, thank you for joining us, humoring us. And we will be back next week with the next exciting episode of Street Check.